Good morning. Happy PCE Friday, May 31st. You know, we'll go over all the charts. We're going to go over Dell. We're going to go over Costco. We're going to go over Ulta. We're going to go over some plays that I really like, some new stuff. I'm going to show you how to find stocks that move. If you're listening right now, you should go to my YouTube channel. You should go to my YouTube channel and watch the live version. So there's always two videos every day. There is the live stream, and then there is the actual recorded podcast. So I shorten it up for those people who don't want to listen to me for 2 hours, but watch the first 22 minutes of the podcast, of the live version. You'll see my face on it. I will link to it in the newsletter. If you want to know which video to go to, I will absolutely link to it in the newsletter. The newsletter is free, dailystockpick.substack.com. I will link to the live video where you can watch it. What was I doing? I was using Trendspider live A+ setup to actually trade during the, and we'll go over it. But I use the A+ setup, which I provide you when you buy Trendspider, and then you email me. I provide you this A+ setup. Simple as that. And I love the entry. Not too crazy about the exit so far, but I've tried it. You can set up and you can customize that algorithm. I think the A+, this is why it's called an A+ setup, A+ entry. But it got it. We were trading TQQQ. Nice 20 minutes, an hour and 20 minutes. Made about 2%. You know, however you wanted to get out. Again, I don't like the exit on it, but you need to watch the chart to do it. If you want to see that, we'll go over that. But the big news of the day, listen, Donald Trump was found guilty. It was, Jim Cramer said there is absolutely no way Donald Trump will be found guilty. Probably. I mean, the trial was over before it started. You can listen to Trump say that it was rigged. You can listen to Trump that the judge had anything to do with it. This is the reason he was found guilty. This man said he would not be found guilty. This man is the jinx of all jinxes. Do not listen to him. You know, that's just it. So again, this is the chart, by the way. This is the A+ setup. This is TQQQ. What we were doing was I said, hey, this A+ setup, it got you in here at 62.45. You didn't have confirmation. Well, once you had confirmation, you bought nice 2% in an hour and 20 minutes. And again, once you have confirmation, you could have bought at any point in time in here when you had confirmation. This one, strong confirmation above that 9-day. If you don't know what confirmation is, go over here to Daily Stock Pick newsletter, dailystockpick.substack.com. Go to the Education Center because I have everything listed in short articles. I give a free 7-day trial. If you can't read these articles in 7 days, you're not putting in time to get out. Don't worry about it. You're just not putting in the time. The daily newsletter that I put out during the day, during the weekday when the markets are open, it's completely free. That Education Center, again, free 7-day trial. You should be able to read it all in 7 days. But we did that live trading. Now, where are we on the Qs? We are right at support, I'd say. We're at 452. Remember, I pointed out the previous all-time high here is going to provide you support. The MACD crossing over. Now, the algorithm, the 4-hour algorithm, had you in at 426. There is no way you can absolutely time the top every time, especially in indexes like the Qs. You can't time these things. So it gets in during this middle ground. It will most likely get you out at some point in time if we continue down. The news, though, is that inflation came in the same month over month. This was bullish. This is why TQQQ actually made it work. Now, if you were playing it on the downside, you would have traded SQ. And on 5-minute candle, if you can't get in and actually make a nice 1 or 2% gain, just using those charts, and you could play options even on SPY, on some of the triple levered short ETFs. You could play options and make a good amount of money doing that. I am not an options guy. I do not condone it unless you know what you're doing. But absolutely, you can use that with news like this. And at the Qs, we're looking at this. It's turning over. I have no indication where the market's going, but the MACD is high. The RSI, I told you before, on May 28th, when this was trading at $460. It was $460. Not a huge move. But if you're nervous and you're losing sleep, I told you that MACD at 71, it's coming off these record RSIs at 77. It was too high. And so we're at 450. This is your first level of support. Do you want to add here? Well, it's Friday. I don't typically say add on Friday. But if you want to and your dollar cost averaging, I think you're fine. And speaking about being scared, look at this. Okay, Amazon bomb. This was a news story on this day from 1999. The idea that Amazon CEO Jeff Bezos has pioneered a new business paradigm is silly. He's just another middleman, and the stock market is beginning to catch on to the fact. Real winners in the market will be the net firms that sell their own products directly. Were you nervous about this day in Amazon history? Because if you were nervous, and I'm pointing this out for one simple reason, is that when it's nerve-wracking and you have a good story, you want to go back and take a look at this. Because at this point in time, we're going to get rid of all of these because these are previous. I used these previously. Remove this segment. Actually, we're going to remove all segments. But this is a quarterly look at Amazon. Let's go and look at the second quarter of 1999. Okay, 1999. Where were you? Well, you were in a bubble. So you were at $3, and I know it sounds crazy. You were at $3.50 on average. $3.50 per share. Okay, you had to endure a 91% drawdown. Yes, it seemed crazy, but if you bought and held, and I would never recommend sitting through a 91% drawdown, but if you bought and held, you're up 4,233%. This is some of the stories that you get with stocks where they're not making money. Simple as that. And you can look at these quarterly charts. Look, Amazon, nice MACD cross up, RSI at 65. It's not overbought, but it's very close to it. But you've been overbought for what, the last decade? So when you had this drop down here in Q4 2022, where the RSI came down to 42 and you were trading at $81, did you take it? Again, you have to look at these charts. You have to look at the businesses and you have to look at the fundamentals, but you have to look at the charts as well. So this headline is a reminder that there are stories in the stock market today that over 20 years will give you thousands of percent of return, even if you're down 10% in the short term. It's more about short term or long term, buy and hold. So take a look at that one. Now, when 50% of the stocks in the S&P make a new 14-day low, it's been a solid dip buy. This is a chart by Trendspider, and we can take a look. I'll include all of these links in the newsletter. So when you take a look at this chart, let me get at it. Let me refresh this because that one doesn't seem to like to go away. But when you look at this chart, this is how you can use Trendspider. This is the daily line chart. These are the number of stocks that reached a 14-day low. And when it reaches these peaks, you tend to just bounce higher. I mean, again, these are the number of stocks in the S&P 500 that reached lows. That's it, 14-day lows. I mean, these are just charts that you take emotions out of your trade. Sign up for Trendspider. I get you 6 months for free. But these are the types of things you can do and the types of things you can look at. Biggest stock movers of the day, we'll go over Dell. Zscaler killed it on earnings. In fact, when we go over Dell, I'm going to show you Dell compared to, when we go over some of the stuff, I'm going to show you Zscaler versus CrowdStrike versus PanW. No, I did that in pre-market. I'm going to show you Dell versus SMCI and others and HPQ. But again, you use Seeking Alpha for that. Biggest loser this day, MDB, MongoDB. I mean, that's down 20-30% at the current time. 23.7% in pre-market. Down at 236. I'm not going to take a look at it. I don't know too much about the business, but I do know they didn't guide very well. Dell took a dip. We'll talk about that one. DJT recovered most of its losses, so you can trade that one. I would not own that one. Waffle houses make more revenue than DJT. Just to remind you. Just to remind you. Now, first one I want to look at, Jacobs Solutions. I saw an interview yesterday. We talk about this being a GLP market, GLP and AI market. This is one where it's interesting. This is an infrastructure, and it's an industrial, but they do all the factory builds for GLP-1 drug manufacturing. And they also do cooling for data centers, for AI data centers. This is an interesting one. Again, it's run quite a bit, 21% over 1 year. Year to date, it's up 5%, but you're seeing this slip down. Why is it slipping down? Well, the valuation is incredibly high. The valuation is, the PE is running above its sector median. Let's see, B minus 17, sector median is 19, so it's running under it, but your PEG, which factors in growth, this is running down below 5%. So it's not growing as much. When you look at the growth is at 8% year over year. So it's not great, not horrible, not great. It's just an average. And can you buy this dip? Well, let's go and look at Trendspider. Let's go and look at the chart. We'll go to the 4-hour algorithm chart. This is, again, Jacobs. The symbol is J. If we look at this one, we can see recently it's got a ton of looseness here. Now, I do want to say that the 4-hour algorithm doesn't do as well as buy and hold. But typically on a downward trending stock, that's exactly what happens. And when we look at the weekly, we can see it's just downward trending. This goes back to April, just in April. When you're seeing this one bounce up and you're seeing these big dips, the 4-hour algorithm doesn't work that great. But you do want to look at it for a stock that you believe in. You want to look at it for entries. And where's the good entry? Well, maybe it's under the 200-day. Because ever since it's been under the 200-day, it bounces over that 200-day. So it's been a consistent winner under the 200-day. Did you want to take this one at 144? Maybe, but probably not, because it's over the 200-day. So you want to take a look at the entry and make sure that you're doing what you can. Jacobs, it's just an idea that I saw yesterday. I thought it was interesting. Thought I'd bring it to you. Now, Dell, I think it's a solid place to add. We can look at this. This is a daily chart from Trendspider. It's a daily chart. It shows you that prior resistance provides support. That's around 140. So this is a daily chart. Let's take a look at Dell on the 4-hour. And we'll go over some of the fundamentals of Dell here too. But if we look at this one, again, you were up 40%. I said, hey, if you wanted to get out of this one, I wouldn't blame you because it's run so much since I first started buying in the 110s. It has run a tremendous amount. I am building up my position. I don't mind what are we down? We're down to 15%, 16%. Where are you? You're trading at 143. And if we just put, say 143, if we put that in right around here, let's go to a daily because we'll go to a daily first. And if we put that in at 143, we're trading at 140. You're covering, you're just using that last gap where it kind of, we're going to put in 143. Your next support level will be 138. Probably will be around here. We're looking, that's where we're trading right now. I'd say if you can get this under 140, I think you're putting in a very good old resistance, which once March 1st, second, April 4th, third, couple of days here, March 13th. This is the daily before it popped up. And then when it popped up, it took off. Now you're using this as your next trend line. So if we just look at a trend line and we let's anchor here, the August lows, August 2023, and we just anchor here and we look for 3 points where it touches on this bottom. Well, if you're looking at support levels, you're seeing that cross right there. It's a pretty good support level if you're trading right there. I would argue anything under 140 is a good one for this stock. Again, Trendspider posted that one. I would argue it. Dell margin, the reason it slipped is because of the margin guidance. And the margin guidance is because they are in competition with SMCI for the server space. That's essentially what it is. They took some server space, server stuff from SMCI. Remember, Jensen Huang said, hey, Dell is a great partner. If you need anything from computers, you go to Dell. Ever since then, SMCI has dropped. Dell has gone up. Well, what happened? Dell's margins, because they were gaining on SMCI, the margins in that business are not as high as their other business. That's the concern. I don't think it's a concern. If we look at this and we look at Dell versus SMCI versus HPQ, we can take a look at this. Look at the price return over 1 year. Dell 204%, SMCI 245. HPQ is only up 20%. If we look at this, SMCI is the only one that's got a strong buy. When you go down here, all of the valuation stuff, it's all good for SMCI. The valuation's a little bit extended. You look at the performance. Look at the performance, total return, 1 month, 16%. Look at SMCI, down 32%. Look at HPQ. HPQ is coming on strong. Again, it's coming on strong. You look at the dividend yield. SMCI doesn't have a dividend. You look at the valuation. Look at the valuation. Dell, full year PE, 21. SMCI, 34. 18 for 2 years. 24 SMCI. So SMCI is not significantly, a little bit more expensive. Revenue growth, here's where the numbers come in. The revenue growth, Dell down 13% year over year. SMCI up 80%. HPQ down 5%. Look at the revenue growth going forward. Dell is flat. SMCI up 65%. Where do you really want to go? Well, if SMCI isn't going to grow as much, they're not going to gain in value. But the Wall Street still thinks SMCI has the value. They don't think that Dell has the value. Because if we go and we look at Dell, we're going to look at Dell again. And what we're going to do is we're going to go over here to the Wall Street to see where the price targets are. I think it's still 160. I don't think anybody's raised their price target on Dell. Let's see. Dell, it's 932. Why is this not open? We'll go to ratings. Sorry, my computer's a little slow. I think it's because I have too many things open. But we can look at the quant has as a hold. Now price target 152. 152. You still have a 5% upside. So if you bought yesterday because it was up over that 152, you're doing pretty well now today. That's why I say anything under 140, even 144. Say you're buying 2 shares because you only want to spend $300. What's the difference between 144 and 140? $8. And we can talk about NVIDIA. NVIDIA did take a drop down when Dell reported. But if we look at NVIDIA, it's up at 1,100. I'm getting worried you will not be able to buy this under 1,000 before the split. And I do think that split over the next week after that split, there will be some crazy volatility in this. Could it go down to 50? Maybe. Probably not. But it could. Could it go back up to... I think you're going to hit 150 before you hit 50 on this. Let's just say that. So if you're looking to buy this, there's generates 10% increase in revenue from 2 mystery customers. This is kind of interesting. 10%. 2 indirect customers each represented 10% or more. We don't know who they are. This was an interesting take on NVIDIA. Beth put out a great one on NVIDIA. You can watch that. How are you going to watch it? You're going to go over to the newsletter and look for that. So Costco now. We can talk about Costco. They talked about membership fees, and I've talked about this. The second they raise membership fees, this will be a $900 stock. This one's down 1%. It got hurt. It went under 800, and I said if you wanted to buy this one and get it under 800, you should have been watching during after hours because it went under 800. Is it one to buy right now? I don't know, but I do know this article and the CFO specifically addressed membership fees. We've historically looked at increasing the membership fee every 5 years. Obviously, we're beyond that time period now in terms of what would be the typical cycle. There's anything about anything that we see within how the business is performing that's changing our view on that. We feel very good about membership renewal rates. We feel really good about the test of where we're delivering significant more value to members than we were or have since we last did the membership raise. if that doesn't tell me that they're not looking to hold the line steady on membership fees, I don't know what would. But again, Costco, if you want to buy Costco, if you want to buy, we can go over here to, this is one that I was looking at, Zscaler. But we'll go to cost, because the two that you want to really look at are Target and Walmart. And I think Target has a specific, again, we talk about good companies with good management and everything. If we go and look at the peers of Costco, Walmart's the most like it. Target's probably the second most like it. The market cap, again, Walmart's the big boy here. But you can go down and look. Specifically, what I want you to see is the 1 month return. Costco 11%, Walmart 8%. These flip when you get to 3 months, 8% and 10%. Target just has not been doing as well. Now, when you go to look at the valuation, Costco is trading at 50 times next year's earnings. 50 times. Walmart's trading at 26. Again, do you want to buy Costco? Is it expensive? Yes. Both of these are in the core portfolio. There's a reason I own both, because I don't want to pick one over the other. And I've just started to add to my position in Costco. So 5 stocks to watch. We talked about Dell. Gap crushed it. Donald Trump media. Trade that one. Just trade it. Chinese automaker NIO will likely see a rally in the U.S. after its shares in Hong Kong rose sharply. Yeah, it's one of the big ones. We got to cross up on it. It's fine. Ulta. This is one that I own. They shocked. They're up 3%. Now, Ulta, I would say, recovered despite warning of Q1 challenges spilling into full year 24. They did warn. I don't know why I'm in the beauty sector. I don't wear makeup. I know nothing about Ulta. I have no idea why I bought this at $420. It's one that I absolutely should get out of. I'm just holding it. It's a very small position. Understand, it's a super small position. But the algorithm makes you 7.9%. You lose 4.2% if you buy and hold. Again, looking at the entry, under $400 was the point. If you bought this with the algorithm, say you wear makeup and you just bought it with the algorithm, boy, you're enjoying a nice 10% pop today in 1 day. 1 day. That's a great pop, and I brought it up to you. I put it in the free newsletter, and your RSI just completely oversold. Your MACD well under the oscillator. You finally got confirmation here. Say you just bought it 383 instead of 380. Still up 10%. Still. Again, this article points it out. There's still some problems with this stock. It most likely is just a pop on some type of bottom. Because when you pull up this weekly chart, you can clearly see we've broken through the bottom of this channel trend. And so where are you? You're probably going to be between 550 and 380. And that's probably where you're going to sit. But I think there's more downside available to even the 350 mark. 340, 350. And you just broke through the 200. Now, traditionally on the weekly, when you've broken through the 200 day, boy, that's a buying opportunity right there. So we're just crossing up above it now. It's an interesting one. We talked about Dell being down. SMCI is down in kind of same thing. And I've said it before. I do think that SMCI is setting up. We got out with a nice 5% gain yesterday. I pointed this out yesterday because I do look at this one because a lot of people want to know, are you getting out? No. I think this is capitulating like this one. And I've said it before. This one from August to December, it just sat in line. I mean, it didn't move at all. August, September, October, November, December, 4 or 5 months. Where are we now? Well, we just started in April. April, May, June, July, August. So you probably want to buy in August. Well, let's take a look. Again, we only have 4 years of data to look at. But if we go to Trendspider and we look at monthly and we say, okay, we're going to go back to when it, we're going to go back here to July 2007. We have 17 years. 17 years. Well, August, 41% positive. Not a great month. But then you get into some of the best months of the year historically. Best months of the year historically. So you want to buy in August. Maybe it's going to take off in August. Write that down. Take a look at it. I am in long. I don't want it to drop. I'm not getting out. I'm similar to Josh Brown on NVIDIA. I'm not getting out. But I do think that we have an opportunity there to get long. The problem is, again, when they're talking about stuff, this one might be a little bit tough to watch. We can look at ByteDance. ByteDance halts plans. This is TikTok. This might be good for Elf. Believe it or not, this might be good for Elf. Elf got their start with some of the beauty stuff on TikTok, and that's what's caused this enormous growth. And when TikTok was threatened to go away, we saw the pullback. You saw the pullback with that legislation right here. Well, what's Elf doing since its earnings? Again, 3 days after earnings, we're at May 22nd. You could buy Elf, but it's an interesting one. It's an interesting one to look at. Again, Elf, that Ulta talked about it, how some of their the stuff is going to leak into this year for the full year. Now, there's about 4 retailers that were recommended by CNBC this morning. Ralph Lauren, Deck, Gap, Urban. I'll go over that. I won't go over that, but I'll put them in the newsletter. Paramount. This is an interesting one. There's news story in the Wall Street Journal about Paramount with the takeover target being sweetened. Be careful with this one. I know it's going to pop on some news, and I'm sure the price is probably at $15 or $16 for the takeover, and I'm sure you can make money if they agree to the takeover. But understand, the offer is most likely being sweetened for voting shares. And Sherry Redstone owns the voting shares. So you may not get a sweetened offer. They may do it a little bit different, where they offer regular shareholders one price and then the preferred shareholders another. So understand that may go through. Very well, Sherry Redstone. Don't think that they have your best interest at heart. They ain't going to pass up an offer that gives them a ton of money. And then, again, they own the board. So they will do that. So take a look at that. There's a bullish divergence on Uber. This was interesting because Uber was up like 2% yesterday. We can take a look at Uber and the 4-hour algorithm. I do own Uber, and I do say it's an $80 stock, and I do think that we see a turnaround. Would I buy any of these buys? No. We didn't have confirmation. The only buy that I would have bought was here at 68, and it went up to 71. But it wasn't super strong confirmation. You only had like a day. And then with earnings, it dropped. And I said that. I said, you're in danger of this one. Now, it's starting to turn over. I've said it before that this 61 is a good support level. Your MACD, super low, below its oscillator. Your RSI hasn't gotten above 50 since the beginning of May. So nobody's buying this stock. So the momentum is horrible. Remember, you want to buy stocks when they are weak. This is why the $61 is a good one. This is the previous all-time high in March of 2021. And then you saw it during these times when it got oversold. Now it's oversold again. Look at those two. I pointed this out recently. I didn't even point this out today. The RSI down at 45, the last 2 times you've seen huge bounces, it has been around earnings. So there have been catalysts for those 2 times. Now, during this entire period, you traded below that RSI, that 50 RSI line. So be careful, but I do think this is a quality stock that you should have in your portfolio. I do. I think my average purchase price is like 40 or something. Microsoft. The failure to close above all-time high was super telling. We talk about this all the time with Amazon, how 188 is the price. This is a daily chart, and we can go back and we can look at Microsoft, and let's look at them in the 4-hour algorithm. Again, it's at 412. We trade all the way up to like 430 or something. But here, algorithm has you in at 402. Hasn't gotten you out. Most likely it will today with a small gain. Small gain, do you want to get out of this one? No, I would argue you don't. This is still one of the great AI plays. We are in an AI market. So do you want to get out? If we look at this daily and we look at the previous all-time close, look at this resistance line. This is clearly right here at 430. Clearly resistance right here. Clearly resistance. So if you buy at 411 today, understand that your top is 430 until we break that cycle. Until you break that cycle, the top is 430. So you want to be careful with that one. Be super, super careful. I like this chart. I think it points out a lot. Spotify, prepare for launch. I mean, Spotify has just killed it when you look at these the chart. Now, am I in Spotify? No. Do I broadcast on Spotify? Yes. Do they pay me? Absolutely. Should I be in Spotify? I wish I'd been in Spotify for a very long time. This one is crazy. The algorithm makes you 47%. Buying and holding makes you 177%. I will argue, and I will go over this in Seeking Alpha, that the valuation is nuts, but they continue to rise. They continue. Algorithm has you in at 302. Are we setting up for a higher run? I mean, again, this is kind of crazy. The RSI, the 50-day, we just had a golden cross. Now, when we look at the all-time highs and we go back here to 387, we're going to do that, 387.44. Back to all-time highs. If you're going there, you still have, 25%? 25% to get back there, and you just had the MACD. The 50-day crossing up. Now the MACD's high. What happened the last time the MACD was up here? We saw an enormous crash. You will not see this crash. The business has changed significantly. This one went down 80%. 80% from that high. So it's bound to come back, bound to get back there. When we look at the valuation of this, it's a little crazy. We're going to go over here to summary instead of the peers. Who are the peers? Tencent Music, Live Nation, Warner Brothers. But when we go over here to Spotify, you can see it's a strong buy in the quant. And how long has it been a strong buy in the quant? Just a couple of days, just 2 days. The valuation is what you want to look at, where it's a little bit crazy. Even the PEG, they don't give forward guidance, but they're not making money. Now, profitability, C+. Again, their margin, 26%. That's not great on a subscription software service. It's not great. They're paying out to the royalty holders. It's ranked number 1 out of 36 in the movies and entertainment stocks. So, again, Spotify, it looks like it's pegged for another leg up. You could be looking at 25%, and that's what Trendspider is pointing out, the wedge. It's the wedge. Looks good. Free scanner. Get a free scanner for double tops. I will include this in the newsletter. You can scan 35 double tops currently detected in the S&P heading into PCE tomorrow. And it shows you all of them. Again, the scanner. How do you import the scanner? Well, we're going to do it because I have not imported this. This is how you get things in Trendspider right here. So I'm going to include it in the newsletter. But when you click on this, it's going to say, okay, I'm going to log in and import. And you get the scanner. And then boom. Double top scanner. You can subscribe. And then when you see the scanner, you can go over here and you can see you subscribe to double top. Here you go. Just look, double tops in the S&P. And it puts it right there. And if you wanted to see it, Amazon, Dow, Lam Research, Microsoft, HCA, Healthcare, ACA Healthcare, Nike, WBD. I mean, they got double tops. And I don't have it listed on my screen right here, but you can put it in. I'm not going to change my screen so you can see it, but you can put it in there. Again, Trendspider provides you all of this. That's how simple it is. That's how I get you my 4-hour algorithm. That's how I get you my 65-minute algorithm. That's how I get you the 5-minute A+ setup algorithm. That's how I get you my watch list. That's how I get you my scanners. Everything that you just saw, just clicking and importing. That's what Trendspider is. Get 6 months for free when you sign up. Use the link in the link tree. Simple as that. I mean, it's super, super simple. Now I have that, and I can scan on it regularly. Let's look at on X double top. There we go. Tesla. I wanted to point this out. This is a Tesla recall. Over 125,000 vehicles to fix the seatbelt warning system. These things are crazy headline clicks. And the reason they do this is because they know they'll get the click. This is basically a software update. So the recall Tesla's going to have to spend money to send out letters to all 125,000 people. And all that it's going to do, before the letter even gets there through the outdated postal service, Tesla is going to release a software update overnight. Now, it doesn't mean that Tesla is not in trouble. It just means that the headlines are worse than the actual event. When you see things like this, it tells you, hey, I may want to invest in that overreaction from the market, because this one is a non-news story. It's basically a light doesn't come on when you don't have your seatbelt attached. That's it. It's a light that doesn't come on. So I am not a Tesla fan right here. I do think that Elon's pay package is a huge risk. I think their demand in this country is a huge risk. I think if Donald Trump gets in and then puts Elon in a position, Elon has done himself no favors by getting involved in politics. And politics aside, whether you agree with him or disagree with him, he's just done his business no favor. And so that's the problem with Elon, is as long as he's in there and doing that, this is a problem for the stock. And we talked about this before on the weekly. You can see that 130, huge support. April, it got down to 138. We can see that huge level. This was previous resistance. Well, where's the all-time high? 414. But the valuation is still crazy. Still crazy. Do not think that Tesla has any hope of actually continuing to 414 without full self-driving. Full self-driving, they're pushing for full self-driving approval in China. They will probably get it. You will probably see a small bump in this stock. Right now, it just doesn't make sense to take the risk on Tesla here. Social request. Let's talk about something. And I want to point out something that, here in Seeking Alpha, you have something called the stock screener. And so if you're looking at stocks and you want to understand stocks, Seeking Alpha is a great screener option. And I think it's part of the premium package. I don't know, but I will include both of these links in the newsletter. But Peter Lynch, this is a Peter Lynch scanner. I left out under $5 billion market cap, but everything else is set. This is a legendary investor. Google Peter Lynch. You can find out who he is. IMMR, top pick. These are 5 things. Country, United States, sector and industry, not applicable. PE under 25. PE non-GAAP under 15. That's the trailing 12 months under 25. Forward under 15. The PEG ratio under 1.2. That's the growth. Earnings per share, 15% to 300%. Debt to equity under 35. And you get these 11 names. Great option. If you want to invest in them, you can go take those and go and look at the charts. IMMR, we can take a look at them. Strong buy in the quant. IMMR chart, when it started passing up on that screener, we talked about this one when I last said about IMMR. We talked about it and I said, hey, this might be a pretty decent opportunity to get in here. 717. Boy, that's a nice algorithm prediction. IMMR. I don't even know what this company does. But again, looking at it from a Peter Lynch screener, back here, 717, you're up 38%. 38%. Now, the MACD, I wouldn't suggest buying it right now. But again, the screener says from a fundamental standpoint, this is still good. If you look at a weekly of this one, hasn't been that great. But the 50-day starting to move positive, 200-day starting to turn a little bit. So it might be an interesting one. If you take a look at this other one, and we go to the stock screener, there's another one, a Warren Buffett screener that I'll include. How to find great companies. This one comes up with 48 names. Now, it's just rated on the quant here, but you can rank it by anything that you want. We can go by growth. Let's look at the growth names, the top growth names. Well, AvePoint, DoorDash, NCO. DoorDash, if we want to look at that one, maybe that's a good one. Because right now, it's pulled back quite a bit. Valuation is a D. We can look at this. Well, the PEG is only trading 72% below what the sector is. And the PEG is Steve Kress's favorite thing in the valuations. But again, number one in this sector, EAT. EAT is a recent alpha pick. And if you're interested in alpha picks, look at EAT. EAT has been killing it. And if you're interested in Alpha Picks up 122% versus the S&P. How do you get this? Well, you go over to Linktree, and I save you $50. If you want to beat the S&P, these are two data-driven stocks, one on the 1st, one on the 15th. It is a typical buy and hold strategy. What you get access to on day one is you get access to all of their stocks that they have in their portfolio. What can you do with the access to on day one? Well, you can do a bunch. Again, create over here. I created my 5 stocks to buy on Monday. I took Alpha Picks and I said, what are the strong buys in there? And I picked them and I went and bought them. So you can do it yourself. But the crazy part of EAT, we can look at EAT here. EAT, as far as the chart goes, has done specifically super, super well. It's an Alpha Pick. It's on the Warren Buffett stock picker. Alpha Picks picked it way back here. I think it was their April 15th pick, if I'm not mistaken. It might have been the April 1st pick. So it did endorse them down. But boy, you've had some great recent stuff. Here, right there, 38 days, 51%? Great Alpha Pick. Again, what you want to do when you're looking at these social requests, what you don't want to do is find a screener. That's the whole plan of this. Find a screener. Use Seeking Alpha Premium, 20% off. You get a free 7-day trial. Get Alpha Picks. These are 2 separate subscriptions. Alpha Picks is more for if you don't know fundamentals and you don't know what any of these screeners kind of mean. Then just get Alpha Picks. Try and then look at their analysis of the stocks. The stocks that they pick have worked. Obviously, with this portfolio performance, they have worked. Now, before we get into the social stuff, I want to bring up my own personal portfolio. Apple is up 0.31%. They plan a major AI update for Siri. And am I going to get into another fight with Siri? No. But yeah, major upgrade cycle. This could mean that you need a 15 or above for the AI to work for Siri. And if you haven't used AI, then you don't know what you're missing. Honestly, it's such a good tool. Now, social requests. BRCC. Outsider wants me to look at BRCC. I don't even know what this is. Let's see. BRCC is BRC Inc. I mean, it looks like it had a recent pop up there. Algorithm loses you 35%. You lose 36% buying and holding. Average win 15%. Obviously, with the current one, boy, don't you wish you were in there, because that's a nice 51% gain in 24 days. That's a great one. Let's see if it's worthwhile. BRCC. I don't know what this company does. We'll scroll down here. Purchase, roasts, and sells coffee accessories, branded apparel in the United States. Oof, boy. Located in Salt Lake City. I just came from Salt Lake City. It's a hold from the quant, and it looks like the profitability, and I think it's probably because coffee kind of sucks. Yeah, I mean, your gross margin, 34%. Not great. Return on common equity, minus 59%. It's not something that I would invest in. I drink instant coffee, and it's decaf. And when I go to hotels, I will brew hotel coffee. I can't argue that it's up year to date, 64%. Great. Looks like a lot of people, when we go to Wall Street, I bet 8 analysts cover it. 2 say strong buy, 2 say buy, and 4 say hold. I don't know how that gets to a hold, but their average price target is 22% upside. If we go to FinViz, say you don't have Seeking Alpha and you can't see all that, and you want to go to FinViz. Well, they're losing $11 million. They're losing $11 million. Cash on hand, 9 cents. So let's see how much that is. What's 65 million times 0.09?
It's 5,850,000.
So they're losing 11 million, and they have 9 million or 5 million. So they're funded for the next 6 months. Outside of that, they need more money. Simple as that. I mean, the valuation just doesn't make sense. Now, price target, 655. We can look at this. It's all from last year. I mean, there's a lot of hype around there. Insiders, somebody just bought 12 million shares at 770,000 at $3.85. You're trading at $5.99. They might have been looking at my algorithm buying at $3.99. So, outsider, if you love the coffee, buy it. I mean, that would be my thing. If you don't like the coffee, I'd kind of stay away. Dex wants me to look at VSTS. This is Vestis. I don't know what they do. Whoo! I hope you're not in this one currently. They have a gap down based on earnings. Looks like earnings missed. It's recovered somewhat. You do have a gap below and you have a gap above. Chart's ugly. You know, the good news is the algorithm, you're even. You lose 0.4. But if you're actually invested in this over 8 months because it's a new one, if you're invested in this over 8 months because it's a new, you're down 39%. This is bad. I mean, VSTS, I don't know. VSTS, Vestis Corp. Let's see what they do. It's not covered by the quant. So, provides uniform rentals. Oh, come on. Uniform rentals, and it's not covered by the quant. Market cap of 1.5 billion. That is super not exciting, Dex. I mean, if you want to trade it, go ahead and trade it. I would not own that one. Scans. When we go over scans, what I mean is the 4-hour algorithm in Trendspider. What do you want to see? Well, you want to see an entry. So what entries do you have? You have Simon Property Group. 148. Are we going for another run? When we look at the weekly and we see this one, you can see the top here, 171. That's probably what you have to go up against. You have a forward moving, upward moving 50-day, upward moving 200-day. You have confirmation over the 21-day on the long term. Bullish trend. Again, this is what the scans get you. Next one in the core portfolio is MPLX. We talk about MPLX a lot as far as the oil goes. It's got a 9% dividend yield. Did you want to buy up here at 41? Not horrible. Do you want to buy here at 40? Well, every time you've come down to the 200-day, it's bounced off. And that's every time since November of last year. Now, if we go back a little bit more and we look at a little bit more of this, every time you've come to the 200-day, you've bounced off. When you've traded below the 200-day, you've come up above it. Is the valuation crazy on this one? We can go over and we can look at Seeking Alpha. Again, I'm teaching you the tools to use to value these companies. They just diluted. It looks like 165 billion senior notes offering. It's up 20% this year. And you know what's killer is year to date, the stock is up 10%. But when we go to charting, and this is what I'm going to point out to you, we can select metrics, and this will include the dividend, the 9% dividend that you get. What I want to show you is this against the S&P over 1 year. 1 year, 31%. S&P, 24%. When we go 3 years, MPLX, 84%. S&P, 24%. That's what you want to see. Because if your stock is not beating the S&P over a long-term period, it's either a trade or just buy VOO. That's as simple as stocks can, as I can make it. Why is MPLX in the core portfolio? Right there, 9% dividend. It is fantastic. You have Target with a cross up. You have Lulu, which, by the way, is still expensive. And I will include, there's a long list of these stocks that are bullish. I will include all of them in the newsletter. But Lulu, it's still expensive. It is not one to buy the dip on. You want to wait for this one. I'd rather see you, again, we talked about this 293 being a first support level. If the next support level, if you break through that, you got quite a bit down. I mean, you're talking about 250, 260. That was what it was trading for before the pandemic. And before the pandemic, for many, many stocks, look at that growth before the pandemic. It was just broken. Now, this one, they had their chief product officer leave. Probably not a good thing, but Lulu is expensive. So just make sure that you know that. Rivian, we talked about Rivian being a $30 stock at some point. It's lost its momentum. This doesn't have the retail push that it once had. You are down 2%. This is a tough business. Again, their deliveries, they announced that they're going to deliver just the same amount as last year. The valuation on this one is crazy high. Rivian, again, you want to take a look at some of the valuations of this. Look at this. When we go to the summary of Rivian and we look at this chart, that's not a good chart that you want to see. Now, the profitability is an F. And the reason is they're losing 40% on every vehicle they sell. Every vehicle they sell, they're losing for 40%. That will turn at some point in time. They have plenty of money. They're not going to dilute people, but they're losing 40%. That's it. I mean, that's a tough business to be in. So that's the end of it. It's Friday. Remember, trade carefully. PCI came in fine. I can do an indices check just to see. Let me see. And I always track this. I always track my personal portfolio versus the Qs. And the Qs are NASDAQ. So you want to take a look at that. It looks like the Qs are up. They're down 0.34. So I am down 0.13. My portfolio is beating the Qs today. And that's what you want to see. You want to see that you're consistently beating them. If you're not, you want to find out reasons. Why am I not beating the S&P year to date? It's because Apple is not beating the S&P year to date. And so Apple is a very large position in my portfolio. Do I feel like I don't want to own it? Absolutely not. Absolutely not. I want to own this stock. It is my savings account. Now, when you go Apple versus the S&P and you go 1 year, look, S&P's up 24%. Apple's up 7%. My portfolio is down because of this. The rest of my portfolio is outperforming. Apple year to date down 0.64. S&P's up 9.7. So when you do this, and we can select metrics, and I will, we'll do QQQ. We're going to select symbols, and we're going to do VOO and QQQ. And this is what you want to use Seeking Alpha for. And you can do, I use these charts for free, by the way. Use the link, sign up for the free 7-day trial. If you don't find that you're getting value out of it, then just cancel it and use the free portion. But here, this is 1 year to date. QQQ is up 10.2%. We talked about how Qs and VOO, they will come back to perform kind of in line. But as you go out further, there is a big divergence. And when that divergence becomes too big, one of two things, either VOO is going to pick up or QQQ is going to come down. Look at the 3-year. When we go out long-term, Apple is outperforming. So even though year-to-date in 1 year, I am underperforming in Apple, I want to look at the long-term because this is a long-term hold for me. And over 5 years, do I expect this to continue to happen? Well, with the record amount of buybacks that they're doing, AI, and some of the profitabilities, Apple is never first to the game. They are never going to lead the charge into AI. They are going to find ways to monetize AI. And then they're going to do it better than everybody else. That's essentially it. Dell right now is under 140, by the way. We're seeing some pressure in the markets. 10 years. Do I want to be in Apple? Absolutely, I want to be in Apple. Now, this is all share buybacks that you're seeing. And so they basically buy back the shares and retire them. They take them out of the market. So their market cap continues to be reduced because they're buying back the shares with their cash. So do I care that I'm not up year to date? No, but you have to have a reason. If you're buying things, say you're buying something like, Lulu. Let's say you're buying Lulu and you say, God, this is going to be, I wear yoga pants all the time. I want to make sure that I have exposure to Lulu, and I'm going to make that the cornerstone of my single stock portfolio. Well, that you're underperforming. What's the reason you're underperforming? When you go long term, you go 1 year and you're under. You go 3 years and you're under. You go 5 years and you're under. You go 10 years and you're over. 10-year track record. If that's the only one that's beating, something's wrong with the stock. So again, take a look at the link tree. Find places where you can support the podcast. Visible phone service, great phone service. Fiber through AT&T. You can follow my trades for free on Savvy Trader. Join Webull, best mobile platform. I was looking at charts yesterday. I love that mobile platform. Alpha Picks, Seeking Alpha Premium. You get 20% off. And Trendspider. Again, you get 6 months for free and you get all of my algorithms. It's simple. It really is that simple. I showed you how to make money today. That's essentially what it is. I showed you my entire system. So with that, I am out. Paid newsletter subscribers, you will get an email tomorrow. I don't know the topic yet. It might be about, hey, we hit the top. What did I look for to trim? Intuit was brought up as a possibility because that stock has really kind of hit its high. And if you look at it, my father owns a large portion of this. This is clearly on a weekly basis. When you look at the weekly, it hits this range and it's broken under that range. And we're just at a weak point right now. So do you want to trim it? My dad, I mentioned, was up 100%, 150% on this one. So I want to make sure that I look at it. We're looking at this and yeah, they told him to buy and he bought. So Intuit, great stock. I might go into that one. SMCI under $800 right now. So might be a good time to buy. Okay. It's Friday. I will talk to you guys next week. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.